Good morning to all traders. Welcome to this week's first market insights video. We're going to talk about US equities, the SPX, S&P 500, if you may, and also the US index. There seems to be new developments around the US slash China trade war. Chinese have published their demands requesting from the US to remove existing tariffs in order to proceed for phase one of this potential deal. The S&P, however, it still remains bullish, right? We don't see any effects. On the other side, we do, of course, know that we've just ended the month of November, and it seems like, to me, that since the markets are not really going down, we should be expecting a Santa rally to initiate, or maybe it has already actually done that, despite and regardless of what's happening with US/China trade deal, because the honest truth is that we've seen a lot of forth and back between US and China, and the stocks keep going up without having a resolution. So is this what is going to cause another move to the upside for fresh highs? Well, my view as well has changed. I was looking at, let me just go a little bit further out. I was really looking at this as a one, let me just grab this pen, 1, 2, 3, 4, and 5. Okay, I was waiting this to end around 31.50 or so. The truth is, with the latest developments and the current structure, right, suggesting otherwise compared to the previous outlook, of course, I think that we're going to move now. We've got first wave, second wave, third wave of the ending triangle potentially, right? Then we should have a fourth one and then another one to the upside. Fifth one, right? That would be the ending triangle that everybody has been waiting for. Everybody has been talking about the ending triangle ending around that time, around 31.50, 32.50. So I think this is going to be part 3 of waves, of the 5 waves, wave 3, okay? Which means indeed we're most likely going to move higher. What we can see here is that this higher level, there's also confluence level, right? If we draw a Fibonacci from A and B, we see that this is the 32.47. If we also draw a Fibonacci extension, again, the last minor wave to the upside from down here up to 3 and 4, we'll see again that we have another good confluence level, 32.46, 47, right? So I believe this is going to be wave 3. Then we should see wave 4 down here, and then wave 5. Let's just move that a little bit higher just for the sake of argument. And then we should be looking really to go near the 3500s at least, okay, for wave 5. And then, of course, we should be looking for these, really to start moving lower, which means to me, to my eyes, that the sell-off that everybody is expecting in the equities might take a little bit longer than everybody expected. Okay, so we are heading into December. We know the Fed is not said that they're not going to cut rates for the moment. The US economic data keep being upbeat, which means also stocks are supported, and corporate earnings as well are doing very, very good in the US. So I don't really see any reason for these for the equities to start losing steam with the current macro and also economic developments. Now, on the other pair, I wanted to look, not pair, let's just say asset. The other instrument is the US index. The US index is moving as we expected. We talked about this last week. We're looking at this 1, 2, 3, 4, and 5 to complete intermediate wave 1, because in the medium and also longer term, I'm still expecting this to move down, right? Now, we might be wrong. We never know. As long as we are below the 98.52, which seems to be a rejection level as we speak, and this looks like it's supporting our current view, because we've got 1, 2, 3, then 4 with an ABC and 5, and it looks like This ABC C wave is the 61.8 extension of wave A at 98.52, which still keeps us positive to the in terms of our negative outlook, let's just call it. Now, in case we move above that level, of course, then everything is likely to change. Okay, well, we should be looking really at moving another, for another move to the upside and potentially even breaking above the previous high.